let's go ahead and make sure you all can hear me. If you would type the number 1 in the text box to let me know that you can, 1 for yes, 2 for no, and if you type in 2, you're lying. It would be very much appreciated. Thank you. Excellent. Hope you guys are all having a good day. Good afternoon to you too, Joseph. So, just out of curiosity, I'm leaving tomorrow for Charlotte, North Carolina. There you go, Jim. Yeah, Jeff, 3. Okay. I am leaving tomorrow for Charlotte, North Carolina. Are any of you guys headed down to that event? I have not had a chance to look at the roster yet. Just curious if anybody's heading on down that way. Coming up over the next couple of days and weeks, I've got Charlotte and Fort Wayne are the next 2 on there, and I just got the schedule for April last week, and I haven't had a chance to update this, but it's Baltimore, Indiana, and Cleveland, I believe, are the next ones I'm going to be at. I've got 2-day Traders Camp coming up in Atlanta on the 29th and 30th. Tonight we'll be back to the regularly scheduled E-mini Trader Talk. The previous Monster Market Movers is still available for another couple of days, week and a half or so. We got Power Hour today and Options 101, guys. I don't have a new date on it yet with Bill, but it is coming up sometime in April. I'm going to let you know there should be another one happening. I just do not have the final date for it yet. So let's go ahead and jump into our disclaimer. Basically, it says, I am not an advisor. I cannot legally tell you to buy or sell a stock. You know what? It's against the law. The SEC, which is the Securities and Exchange Commission, they require you to be licensed in order to do so. I am not, and I do not want to be. So if you find a candidate, indicator, set up something, anything you like here today, my suggestion, just paper trade it first before ever putting 1 penny of real money into the trade setup and indicator, and then only then would you do so if it fits your own personal risk profile and risk tolerance. Now, keep something in mind. Because I'm not an advisor, that means I'm not under trading restrictions. That means that I may choose to enter or exit a trade at any given time without prior notice. All right. So I'm going to take that down. So Drea said, I wish all. I want to do a study, practice, and go to 2 events, but have a job and having to fund my education is preventing me from doing this. Yeah, Drea, I understand. You know, there are 2 things we want more out of life, right? Time or money. Whichever one we want is usually the one we have to give up, right? So, you know, you're busy. You've got a problem with time and having to fund your account and your education. So you got to figure a way to make it work. You know, I borrowed money on credit cards when I first started. I'm not recommending anybody to do that. You guys got to figure out what works best for you. But I didn't have the cash to do it. We didn't have any cash. Cash was almost an illegal thing for us when I was first getting involved with the market. I just figured out a way of, you know, what can I, you know, give up, or how can I do this? Part-time job, whatever it took, shoveling snow, you know, whatever, which I did a lot of, to get some extra cash, handyman work, whatever I can come up with. And guys, again, you have to figure out how it works out best for you. But I guess it really comes down to one and only one question, and that one question is, you know, how bad do you want it? And you know, I don't mean to sound harsh right out of the box, but that's really what it is. I mean, I know everybody's got responsibilities and things going on in their lives, but how important is, you know, the basketball league that you play on Tuesday nights? Maybe it's very important, I don't know. But there's got to be a give and take. How important is the money you might spend at that basketball league? Because after that basketball game, hey, we go back to the bar, shoot a couple down and a couple of beers at, if you're doing it over here, it's $8, $10, $12 a beer in New York. But I think you guys get the idea of, you've got to figure out a way, Drea, that, you know, you can come up with the time and come up with the cash. You know, so one of the things that I've done when I first got started, and I was busy, I was working 12 to 16 hours a day, Drea. We made 6 figures a year, and my wife spent 20% over what we made. And I say my wife, you know what, I'm as big a culprit as she was in it. We spent 20% over what we made. And so we had no money and I had no time. And I had to figure out, and I figured where to get, you know, 4 hours a day, 3 to 4 hours a day, every work day. I figured out where I can get that 3 to 4 hours from. And then money just became, we didn't spend on anything. We stopped going out. Literally nothing mattered. We didn't spend money on, as little as we possibly could to come up with enough money to put away to get started. So just some thoughts. But really, don't ever give up. I mean, just keep pushing forward, keep fighting, keep living the dream, or fighting for that dream that you want to live, because it's there. I mean, the potential is there. Guys, how many of you believe that there's a good opportunity to make some serious money in the market? You can give me a 1 for yes or a 2 for no. Do you think some other people out there might be doing it already? So Drea says, wow, 3 to 4 hours a day doing what? Studying, watching DVDs, books. What were you doing and for how long? Drea, you hit it right on the head. That's exactly what I was doing, everything you said. To me, it was about studying. It was about reading charts. I'd go back in history. If you pop open, let's see, we'll take a chart of Apple since it's such a popular stock, right? And I'd go back with a daily chart, and actually I wouldn't have started, well, we'll leave it at Apple for now, but I would have gone ahead, and let's say I didn't know who this stock was, and I would have pulled this backwards, and then I'm going to change it to Amazon. All right, now that I'm kind of, well, yeah, see on the e-signal it pulls me forward though. All right, so it doesn't matter. Let's just go back to Apple. So I'll pull it backwards, try not to pay any attention to what's going on. I'll pull it backwards and then get to a zoom that I am comfortable with. Oh, I hit a key, I guess. Get to a zoom I am comfortable with looking at. Right, and then just start, with my right arrow key going 1 day forward. I'm going to try to get the whole bar on the screen like that, so it's not a half a bar. Okay, so, and I would just then, 1 day at a time, I'd go, all right, so what am I looking for? I'm looking for a moving average bounce off of here. If I get the bounce and it gets up above 92, and 3/4, I'll take the bullish trade. Right, okay, bounce, so I'm not in the bullish trade. We're still looking at about 92 and 3/4-ish. All right, so we're looking, all right, nothing going on there. It's pulling down. All right, so we get one more candle, opens higher. I'll look to push higher. All right, so I'm in the bullish trade on the open here, right? And where's my next target? Well, my first target is up at the top right there, about 95. If it gets down to 91, 91 and a half, I'm going to pull the trigger and get, oh, there, my first exit's already hit. So, Drea, I would go back and do this kind of an analysis on stocks, learn about, and this is just a daily chart. You could do the exact same thing on Apple or, again, any other stock with a 5-minute candle. Learn how to trade that intraday pattern. And as I'm, going intraday, I'm going to say, okay, I see there's a bit of a rectangle forming right in here, right? So now, as I start to push forward 1 bar at a time, what am I looking for? Do I get a breakout of the rectangle? All right, so I'm looking at the top of that rectangle there. Boom, there's the breakout. Let's see if we can get a retracement back to the moving average and a bounce. There we go. Came back, it retraced to the moving average, and it bounced, right? And there maybe was an opportunity to take a bullish trade. So you can do now that ended, by the way, the trading day, and then the new day opened up. So you can do the same exact thing, Drea, on 5-minute candle or 15-minute candle, whatever time frame you would tend to use, you could do the exact same on there. So that was a big part of what I did, was learning the charts, learning the stocks. I did a lot of research on chart patterns, on technical analysis, things like Fibonacci. I had my mentor, who happened to be a personal friend of mine, that I would spend countless hours on the phone with. There was no real internet to deal with at that time. There were no chat rooms and Skypes and and all of those types of things that were available. Email was though, but we would spend hours and hours and hours on the phone or in person looking at charts, and him teaching me. And so for some of you say, well, Rob, I don't have a guy like that. His name was Vaskin. I don't have a guy like Vaskin. Great, that's right, I'm here. That's why Bill and Mark Kay are here, John, and and Tony, guys, because you get involved in the market insights, you get involved in the trader talks, and you can do just that. Excuse me. All right, so Drew said, I definitely see the potential, and I feel like I'm almost there. That's good. Drew said, I wish there was a test asking about delta, theta, time value, selecting the right options, patterns, entries, exits, sort of step-by-step guide to traditional school to get a degree. So, Drea, I do not have a college degree. Okay, I went to college at night. I did drop out. I took chemistry and calculus the same semester, and it was 4 nights a week, 4 hours a night. I was killing myself after the first week. I dropped out and said, I'll go back next semester. Well, that never happened, obviously. So I do not have anything against traditional education, but I just want you to think of that traditional college degree or education that you receive. So the greatest, the best, considered to be the best business school out there is Wharton School of Business. Would it surprise you to know that less than 50% of the instructors there have ever owned a business? Many of them have never been in business at all. So I'm not saying, Drea, that it would be a bad thing to have something like that, but just be careful as we compare it to traditional education, because that really doesn't set people up in the masses for success. It sets you up in the masses to work within society, right? But the bigger successes come from those business owners that take that risk and step out, and that's kind of what we're doing here in the market, is kind of stepping out and taking that risk on. John, hey, Johnny, good to see you, buddy. Johnny says, most professors have very little real-world experience in all disciplines. Yeah, you're absolutely right, Johnny. It's not there. It's just not. So, but guys, the potential is there. And by the way, every one of you, we had quite a few put the number 1 in for yes, there is, the potential to make money here. And there truly is. Is it easy? Heck no. Drea, back to your point of a test. One of the things that we do in my market insights is, well, actually, you know what? Maybe I'll tell you what. The first person, and I need a stock above 100. The first person to give me a stock above 100, I will look at that stock and I'll analyze it as if we are going through what I do in my market insights. Okay, so Denise got in Facebook, right? So we'll go and look at Facebook. And I'll look at the other stocks, guys. No worries. I'll look at the other ones. But this one I want to do just a little bit differently because of the way I'm going to analyze it, starting off with the daily chart. And that's really, to me, what it comes down to, is looking at the daily chart. Okay. So you can see when we look at Fibonacci's, I'm looking for the largest move closest to the right side of the chart. And this move right in here from this low up to this high would be that exact move that I'm looking for. So I'm going to draw my Fibonacci's on there. Right, coming from that low up to that high right there. All right. And then I'm going to analyze what I see. I'm going to kind of step it in a little bit so I can make it a little bigger picture. We had one hiccup day in there right before earnings. Their earnings came out. They ran up, had the nice pullback. We violated the 618, not quite to the 764. Got back above our moving averages. And let's see. Let me pull this out just a little more, just to make it easier to see. Let's do it one more way. Let's do that. I like the fibs, the numbers of the fibs completely unobstructed, off on the right where I can see all of the chart and none of this is being blocked off. So I look at this right here. I look at Facebook and say, okay, what would I be doing right now if I'm looking for a trade setup, for a potential entry? Now, this is a daily chart, and this is where everything has to start, is on that daily chart. This is what we do, right? And let me grab Let me open this up. Yeah, it doesn't like that. Let me grab this right here, this tracking sheet. Okay. Let me go ahead and get my questions box back again. All right. The questions box becomes its own entity here. In other words, it completely, it has to stay in the forefront. It doesn't allow anything else to be there. Excuse me. So I'm looking right now and saying, okay, this is the current on Facebook today. We're at 110.28. I've got a resistance at 111.01, and I've been up in that area to 110.56, right about where we are now. I've been there already just a few days back. That was a nice failure that took place, a break of the moving averages on the way up. So I'm looking at this saying, all right, a little bit too tough for me to take the entry today, but if we came back and closed near the 8 moving average today as an example, and tomorrow we made a slight move up, there would be a good entry for me. And if I took this trade just there at the exact place that I'm talking about, if I took that trade, what I'd be looking for is to take it right around 108 3/4, 109-ish. As a rule of thumb, we use our first exit as $1 below our resistance. We just use that as a general gauge. So as you're learning, you've got a hard target already in place. You don't have to try to figure out what that might be. It's figured out for you. It's just a hard target that we work with on all of our setups, right? So if I'm looking at targets now, I'm going to set up 2 different bearish targets, and 2 different bullish targets, and we are assuming that the stock is right near that 8-period moving average, that it closes there today. And we're doing this at the end of day, right? If that were the case, if we closed, let's say right there was our closing price, right? Tomorrow I'd look for the bounce. Give me that bounce up to about that 108 3/4, and I'll take the bullish entry. But if I'm wrong and it goes down, where's it going to? And I would write down 106 3/4, right? It would be on my first target, and then 103.5. I don't put exact numbers. I just put them in quarters. It's close enough for me, right? If I have to start remembering 56, 74, 81, 38, forget it. Quarter, half, 3/4, a lot easier to remember in my head. So I'd be looking at that 106 3/4, 107, and 103.5. On the upside, I'd be looking at 111, and I actually have a Fibonacci in there, I think. I do. So we would need to apply a Fibonacci in there. So we would put the 118, the 118. All right, so we would have 111 would be my first target, 114 1/4 would be my second target. So you guys see the process of what I'm looking for here. So if I took that bullish trade, right, that's where I'd be looking for it to go to. Now, I pulled open a spreadsheet that shows we took a trade on March 11th. Where's March 11th? Right here. So we took a trade on Friday at 108.5 because we had a note in place, an order in place to take that trade on a move up. And our note said bullish above 108. So we opened up on that particular day. Let's put a data window in there just so it makes it easier for you to see it instead of me just throwing numbers out at you. So if you look here at the open price, when I put my mouse over yesterday, on that box, the blue box on the left, the open was 108.48. We round it and we put it in at 108.50. We don't put odd numbers in. Quarter, half, 3/4, and of course 0 for the 0 cents. So we got in this trade at 108.5. Our first target on this is 111, right? Is the target, which means that's resistance is what I'm giving you, not the place to get out. You'll decide ultimately where your exact place to get out. What we will do is our first exit will come at 110. My high today was 110.33, so we're already out of our first exit. So we had 10 contracts and we just sold 4. and we got in at 108.5, we got out at 110, which means we had $1.50 move on our stock. It gives me $1 move on my option, so we're up about $400 because we're going to sell 4 of our 10 contracts right there. Oh, but Rob, it's still moving higher. Yes, it is. We only sold 4 of them. Our next target is up here at this 114.5, 114 quarter level to sell 3 more. And then the next line is to sell 2 more. Well, we get in at 108 and we get out at 118, just to make round numbers. That's $10. That's $9 and change on my option. I'm not really that upset that I got out of some of it with only $1 profit. I haven't, Debbie. All right, so I've been on a little bit of a rant there, guys, so I haven't paid attention to anything that was in the text chats. Let me go back. So Brenda had said, even with a traditional degree, it is still hard to find a great job that will pay you what you're worth. I get it. Andrea and I are still waiting for my breakthrough as a skilled trader while I am working 10 hours a day. And it isn't easy, Brenda, and I applaud you for sticking it out. For anybody that does that, I truly applaud you for doing it, because there are many that have backed away. And I understand, why some people do it. It's too tough for them, right? So Tim said, how do you determine where to put the stops when trading the E-minis? How do you determine where to put the stops when Oh, that was just a duplicate question, I guess, Tim. It came across twice. So how do you determine where to put the stops when trading the E-mini? So let me just write a note of E-mini stops. And we'll get to that one in a moment. Tim, let me just stay on the equities just for a minute since we're here. Debbie, I did see all your stuff on Facebook about your dog and winning the second place. Congratulations on that. That is awesome. Tom said, my computer crashed the second time. Is there a download to get your fibs from the Market Insights without trying to get them to the archives to save time? Tom, if you mean to download it directly onto your computer, the answer is no. There's no way to do that. You have to view it online. Let me see. Patty said high reliability and high probability. Excellent. Yep, that's exactly what I want. And it's a 3-tiered system. It's high reliability, high repeatability, and high predictability. It's got to fit that criteria before I'm interested at all in taking the trade. So Drea said, when you first started, did you trade one contract, and did you stick with the one or anything specific? I started with one contract, Drea. That's all I did. That's all I did. And then I made it 2. My goal was to get to 10. So I'd use the doubling factor. I went from 1 to 2, 2 to 4, 4 to 8, and then at 8 I just went to 10. So that's the way that I did it, Drea. Johnny says, on pullbacks to the moving average, do you buy more contracts after selling the first 4 if there's a pullback scaling in as the move trends up or down? No, I do not, Johnny. And that is for a very specific reason. And I'm going to ask you guys to answer this. Anybody that is familiar with Bollinger Bands, please tell me what the settings are. Well, and Johnny, I'm going to explain it. I'm going to explain the why. Please tell me what the settings, normal settings used on Bollinger Bands are. Right, Scott, 20 and 2 are the normal settings. Scott, have you even commented before? I didn't even know you were here. It's like you've been hiding in the background. Never, yeah, there you go. 20 and 2. So the 20 is a moving average. The 2 is the standard deviation, right? So Johnny, I use that because a lot of people understand what Bollingers are. Yes, Patty, he is being quiet today. Maybe he's a little under the weather. Exactly. That's what I was wondering. Oh, there we go. Yes, I did see the bizarre ones on the first question, Scott. Okay, so 2 is the standard deviations. If you look at a Bollinger Band, let's see, I think I've got one set up here. Yeah, if you look at a Bollinger Band, we'll look on this chart, and I don't have the 20 simple moving average in there. I just have the 8 and the 21 exponential. It's very rare that we get outside of the Bollingers, and it's even more rare to stay there. You can't stay there. It's impossible. We popped out, we won more, and that's it. We're right back inside the band. We pop out, one more, we're back in the band. We pop out, one more, we're back in the band. Right? If we go back in history a little bit, and this is the Dow, right? We pop out of the band, two more, we're back in. We pop out, two more, we're back in. You can't stay out very long. Here we popped on the bottom. 1, 2, third one, we're back in. Now, 3 is not a given, but it is a common number of how patterns tend to move, is 3 or 5 bars, right? So we know that the stock cannot stay outside of that 2 standard deviation move. And the deviation, if you looked at Bollinger Bands, I don't know if I can see. Do I have a 20 in there? I do. I have the basis in there, which is 20, right? So if you look at that orange line right in there, that's the 20 simple moving average, which is an exact split of the 2 bands. If you look at that, the distance between any of those 2 lines, the distance from here to here is equal to the distance from here to here, because each one is 1 standard deviation move, okay? Well, we know that stocks tend to stay within that 2 standard deviation move. If we go back to equities, right? Johnny, what really happens is by the time the stock makes a 2-line move, and that would include the Fibonacci, which I put in here, by the time it makes a 2-line move, the stock tends to fail and turn the other direction. Now, that doesn't mean it happens all the time, but if you look, we were below the moving averages here, right? In this cluster, we got above, we came back and tested, we moved up 1 line and failed all the way back down to here, right? Even if you held on, we moved up 1 more line and then came all the way back. Now the question is, if I got in right here, let's say this candle right here was my bullish entry, and let's say that I was going to give it some wiggle room knowing that it makes a 2-line move. So that 2-line move is up to here. Right, there's my 2-line move. Would you still be in the trade when it pulled all the way back there, which is about where my entry was on the very first day? Probably not. So has it gone back up? Yes, new entry. Not the same entry. Okay, so we know that stocks tend to move 2 lines, Johnny, which is why I'm going to be out of the majority of the trade by the time it gets to 2 lines. So if I'm in this trade right here, which we are, we're going to exit 4 contracts here, 3 contracts here. 70% of my trade is gone, and I don't have to worry if it goes against me now. Yeah, I'll give some back, but I don't care at that point. And if it runs, if it does, it gaps up like it did earnings, goes, from where it closed, 1, 2, 3, 4, 5, 6 standard deviation move before it failed. If that happens, I'm scaling out along the way, and that's a home run for me. And I'm okay with that. I'm okay with I gave some back on my last contracts, but that's all part of the 4-3-2-1. And it's not something I can spend a lot of time on here. I just don't have the time for it. But it is something that we live and die by inside of the Market Insights. It really is what we do. All right, cool, Johnny. You are quite welcome. Yeah, Debbie, haven't looked at ES, YM, nothing. While we're in here. All right, let me just make sure. All right, I just want to make sure there weren't individual questions. Now, someone did have a question how, and I think it's off screen a little bit, but how I got that 118 in there. And sorry, at this point, I don't remember who typed that in. Yes, Tom. So stops are at moving averages or below the moving average. My stop is not going to be right at the moving average because that could be a bounce point. So I'm going to have to be below the moving average somewhere. Brenda, you had put that in, and it was the 118, correct? That you were asking about? Yes. All right. So Brenda, as long as you know, do you know how to draw the fibs on here on your charts? whether using eSignal or somebody else. Okay, so now with eSignal, we right-click on any one of the fib lines and we go to Edit. And then I just want to change one of the lines to a 118. And you could change color if you want. You can do 1,000 different things with it, right? But you just want to change one of the lines to 118 and then put a check mark next to it, and you change it very easily. If I came here and said, all right, I want to put if I put a check mark and said I want to put a, let's see, 0.89, just to pick an example, right? It showed up down here, right, is where it came in. So watch what happens. You can see, drag it over to the left a little bit. You can see the red line, the 0.89, as I uncheck it, it disappears. Recheck it, it's back, right? So that's all it is. And then you're good to go. You've got your extra fibs drawn on there, which for me, Fibbits, right, are the big deal. That's what I'm most worried about on my Fibbits. All right, let's take those off. Very cool. All right, good. Yes, Brenda, so the Fibit is half the distance between those two fib lines. So I actually created a fib tool, a Fibit tool on eSignal. So if I didn't have that 118 in there and I did the pull down of my fibs, it says let's see, Rob's Fibit right there. Now I could go ahead and draw the Fibit inside manually in there. The only bad thing is if I move this fib out right here, the Fibit doesn't move, and now I have to move that one out manually, and it has to be done from up here. So it makes it a little more complex to do it, which is why I would rather incorporate it into the main fib. I'd rather incorporate it into the main fib. So Joan's asking, what are the rules to add the Fibit? So the rules for adding it, Joan, are we look at the wildest average true range. In this case, it's 305, right, on a daily chart. So we're going to call it $3. So the distance between 111 and 117, you're going to look at that, and I'm going to take that Fibit out of there for now, right? So we look at the distance between the two fib lines and say, do I need to apply a Fibit in here or not? Well, here's how you know. That distance is 11 to 17, so it is 6.5. Well, if we look at the wildest average true range, which is $3, you can see on the right side, 305 it says. We're just going to call it 3. If it's $3, we double it. Double the wildest average true range is 6. So if that distance is $6, $6.10 to be exact, if the distance in here is greater than that, Joan, we have to split it in half. And you could do it with nothing more than just horizontal line. Whatever works for you. If you don't have the ability to modify fibs on your charts, or if you have to build your fibs manually, which I know some that do because their charting programs don't come with fibs, then that's how you would do it. You can go ahead and manually just snap a horizontal line on there. I don't like it that way, but it's as simple as that. Get it close. It doesn't have to be exact. Right? Does that make sense, Joan? All right, I'm going to scroll up, and we had some other symbols get put in there when I asked about Facebook, and I'll take those as the ones we're going to start off with today. So let's go look at the next one I see in there. Johnny put in is Google, and Johnny, I look at Google instead of G-O-O-G. Is the one that I tend to trade. So you didn't put which one, so I'm just going to assume it's Google that we want to look at. So now, first thing I want to do, get the drawing tools out of the way and give me as much chart time as possible. And right here, if you're only looking at this, you're saying, ooh, I see that big move for the fibs. Yes, but we need to look back and say, all right, where are we? Is there a bigger move taking place somewhere that we can work off of? And there really is. So if we go ahead and draw the fibs from this low, oh, see, I had the fib activated, and I've got to make sure that I get the check mark next to Rob's Fibonacci retracement. And let's see. So here's the first thing I'm going to do. I'm going to edit this, and I'm going to click the button that says Extend Lines, just to make it easier that I don't have to drag it out, right? And I can see that I'm not quite there at the top. So, all right, perfect. There we go. So we've got our fib in there. So now I can actually drag this back a little bit, keep the entire fib on the screen. And yeah, we had a nice pullback here. It was actually the first pullback. So guys, let's use that as an example. We had this great pullback, broke the moving averages. We pulled back to a key area. We made a 1-2 line move, a little bit more, and then we failed half that distance. We pushed back up a little bit higher, and we failed again. So I'm not saying that, you know, it doesn't go higher. The question is, will you sustain the pullback from 743 down to 706, 705? Probably not. I won't. There's no way I will. It's way too expensive, way too costly for me to do that, to look at that, right? So right now, Johnny, I'm looking at about 727 and 706 are downsides. Well, actually, 735 is the first downside on there because we've got the 8-period moving average. On the upside, we need a fib inside of here, so we need to add the 118. And guys, you can, when you set this up, you can actually set it up and save it as default so that that line is always there. So there's the 118. So it looks like about 774 and 794 are the two upside targets on Google. All right, cool. Let's see. Drea was asking about Apple. Oh, there's no slash after it. Okay, so let's go take a look at Apple. We had a very nice move down from here in December. So let's go grab the fib tool. I already have it, so now I can just click on there. It's already activated. And let's see, we're right down to that bottom. Let's extend the lines out to the right. And I need a different number in there. I need a negative 0.136 as a fib, which is down here, this kind of greenish line down there, right? So if we kind of scrunch that down, there's my fib inside of here. And ironically enough, as you see, when we violated, we came back and broke. We came down 1, 2, 3, 4, 5, 6 times to that line. And guys, if you did not have that line in there, if that negative 136, and it does belong, if that negative 136 was not included there, and all of a sudden you see the stock failing in the middle and you have no idea why, this tells us why. This gives us the insight, Fibbits, give us the insight into why something fails where it tends to fail, right? If we do get the pop to the upside, we're looking at 105 and 108-ish are the upside targets. Expedia. Joseph was asking about Expedia. Let's make sure I didn't miss any questions. Okay, cool. All right. Ooh, nice little pop on Expedia. All right, so let's analyze it. Where do we see? Biggest move I see comes, well, we had this move down and then this sideways move. My first thought was, ooh, right there. But that move down brought me into a sideways pattern, move down, little hiccup in there, back to moving average. I'm okay. That big candle is making it all right. We came down, and that's a clear V bottom in there. So let's go grab the fibs from right there about 133 down to about 88, 88.36. And real simple, $4 is our fib, our Wilder's average true range, 430, so we'll call it 4.25, $8.50. So I'm not worried about the bottom one. We're not doing anything down there now. We're not trading there. But from 122 to 133, 122.5 to 133 is $8.50. We're fine. We're covered there, so we're not too worried about it. We don't need to split that level. So it looks like 122.5 and 133 are the two upside targets. Downside is 116 and 111. And again, ish. They're not exact. Ish. Close enough. So Debbie's saying, I guess I don't understand where you put fibs when you say a little hiccup, but the high, at the high, I took it because it went sideways. So Debbie, when there are rules to technical analysis. So that high right there is we're looking for a directional move. Ideally, what we don't want is a stair step, right? So ideally, what I'm not looking for is this happening. And I may not have a choice. That may be the pattern. I may not have a choice but to use that highest high to the lowest low from here to here, right? But when you get a move down, right, as we have right here, right? So this move right here, Deb, we came from here and went sideways. As far as I'm concerned, the pattern is still in play. Then we had a straight move down, and then this candle, Debbie, right here, gave us a larger than normal, 2 to 3 times larger than the normal candle. Don't look at this one candle, but look at all the other bodies now, how small they were. That body is 2 to 3 times that size. So we can use the center of that body let's just try it like that. Trying to use a diagonal line and use it sideways. Oops. So close enough. It's not perfectly straight, but it's close enough. But Debbie, we can use the center of that body as a resistance point. As long as we don't get above there, then we can forego that hiccup in there. Right. So as long as the direction is still in play. It is, Debbie. But remember, that could have turned into a stair step, right? It didn't. If it had turned into a stair step, then no, we would have just used that bottom right there as our bottoming point. But because we didn't take out the center of the big candle there, over the next couple of bars, I'm not looking for this to be 2 months later. I'm looking, ideally, it's only 2 or 3 bars. This took a little bit further than that, 1, 2, 3, 4, 5, 6. Ideally, it's just 2 to 3. But that gap down just made it even stronger of the bearishness associated with it, okay? So that's kind of what I'm looking at there, Debbie. That's the reason for that anyway. Okay, Joseph said, thank you for Expedia fibs. That's what we had. Good. And that's what it's all about, Joseph, right, is being able to say, I drew them here, so where's Rob got them drawn now? And at least you've got a comparison of something else to work with. So let's go back up and see what other symbols I missed. Let's see. Dr. Tom put Baidu. Oh, there's no S. Baidu is one that we trade. Actually, Baidu is one that I am in right now. I'm pretty sure we still have that trade open. We do. We've already taken one exit. So we got in. Well, actually, let's draw the fibs first, and I'll talk about where we got in and so forth. So let's see. All right. So if we draw the fibs, right, from about And the hard part here is just finding the very bottom, guys, with e-signal. There's no snap feature. Oops. All right, let's just pull it all the way out and do it that way. Okay, perfect. So that's what we're looking at as far as the fib goes, right? So now that the fib is drawn on there, let's kind of press in a little bit on it. Actually, let's do it this way. All right, this way it just allows me to have a better visual of the numbers, getting it off the screen, right? So Baidu, if I were analyzing it right now, I would say it's too far away from the moving average. It's sitting near resistance. Do I really want to enter a trade now? The answer to me is no, I do not. For me, I'm looking for the move back to the moving average. The difference here is we took this trade on the 9th when the stock was at 175.5 was our entry. So right here, we got down below the moving average. Our note was bullish with the pullback to the 8. It pulled back and went below. We bounced and got above, and at 109, no, what am I talking 109? At 175.5, I'm mixing this one up with Facebook. At 175.5, we took the bullish trade on this day. Right, it got up to about 176 on its high that day. So 175.5 was the entry. We already took our first exit on the 11th, which was right here, as it pushed up and got to the 183.5 level, $1 below, and it did hit a high of about 183.80-ish. So 183.5, we did pull our first half of the trade, or our first 4 contracts off. So, right now we're up $3,200 on our Baidu setup right now and what we do in the market insights. Okay, so I know some of you say, Rob, I just don't have the time. I'm so busy. Awesome. This is not a live trader talk, the market insights. It's a video newsletter. Gives you an opportunity to, you get an email yesterday that said, hey, here's where our targets are. Here's where our exits are. Here's our entries. Here's how we set our stops. All of that is part of what we do there. All right. So I'm looking at, as far as the upside targets, we need to put a fib in there. Right. There is a fib required on this one. So our upside target is 197 and 207. And also there should be a line drawn at the 100. Level. So, and I at 200. So on every chart, you should have lines drawn at those key levels. I like it to be a red line. I also want it to be a different style, more of that dash line. And I want it to be right at 200. And you can save that as a default line also, guys. Right? You can, I'm trying to remember, save template as Rob's 100 line. So now the features that I set up in there, if I decide to go ahead and click on not the horizontal line itself, but click on there and go find Rob's 100 line, if I snap right there, it's going to come up as that red dot or red dashed. I just have to then edit it to the price that I want, but it'll have the formatting in place that I want it to be. Right? So, guys, I like Baidu. Baidu has proved to be a real nice setup for us. Our next target on Baidu is that 197 level, which is up in here. So if we got in at 175, let's say 177, we get up to 197, I ain't complaining a whole lot about that move if it fails at that second line and rolls back over. I am just completely okay with that. Like super okay with that at that point. Let's see. All right, so we got Expedia in there. Oh, okay, big questions. Let's see. Correct, Joseph. Good catch. Joseph said it should be a bullish trade on our tracking sheet. Over the weekend, I realized that I was doing the update, and I had typed in Amazon's symbol by mistake at $175, as if it's not closer to 600. So I had the wrong symbol in. I had all kinds of craziness in that whole setup. So I did just make that adjustment. Thank you there, Joseph. I appreciate that. You're welcome, Dr. Tom. Let's see. Just want to make sure I didn't miss any others in there. Let's see, COF. All right, so COF is our next one, which is Capital One Financial. So if we look at it, guys, what's going on here? We had this little bit of a V top in there. It went sideways, but it was a V, right? Had a little bit lower top in there, right? And then we made our move down, and then we push up. And then we make a move down, and we push up. And we make a move down, and we push up. So it's not a perfect setup, but it is a little bit of that stair-steppy. I don't like it as a place to draw fibs, but it's not all about me liking it or not. It's more of, it's just what the stock hands us. So I'm going to draw from that high right there. Now, Debbie, if it were not that stair step continued in there, I would have drawn off of this high, which would have put the fib slightly off. So, guys, a lot of this, I use the phrase when I teach a next step. Technical analysis is a science until you learn it, then it becomes an art, right? And it's the finesse of understanding and learning the various setups out there. So let's pull it this way. All right, right there. So right now, bias is bullish. We're looking for a move up to 71.75 and 75 are my two upside targets. I'd like to move back down to the 50%, which is also the pink line, the 8 moving average. That would be a wonderful confluence if we can get that move back down to there. I would love to see that setup on there. Love, 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 love to see that. That would be a great place to close, bounce that next day, and take COF from there. So Debbie had asked on ES if I had looked at it at all, and I had not looked at it since we've started. But we've had just a very choppy day. It's been up and down. And look at the wicks. Look at those long, long wicks. You're welcome, Joseph. Just brutal on those wicks. If we go and look at the YM today, and I'll move it in. Well, actually, let's get rid of this. Let's do this first. Let's put this back in place. Let's put this 5-minute out here. We still have some wicks. It's just not as bad as the ES chart is, right? And actually, look what's happening. I just missed the bounce right off of the moving average there on the YM. Let's see what ES is doing. So we had a little bit of disparity going on today, right? If you look, and let me see because I haven't seen it since we came back. But we were down. We were down about 4 points on the S&P, on the ES. We were down about 4 points, and we were up about 30 points on the YM. So, and now we're up a little bit higher, and we're down very little on ES. So we've had a shift. We had an actual disparity where the YM, the Dow was going up, and the S&P were going down. You see that happen more often with the NASDAQ than you do with the Dow versus the S&P. You'll see the S&P going up, NASDAQ down, or vice versa. S&P down, NASDAQ up. It doesn't necessarily follow the natural order, where the Dow and the S&P tend to have more similarity to them. We need to switch. Yeah, so Scott, we're going to talk about that tonight, about making that change over. Scott was saying the YM M6 We're going to talk about that tonight in the E-minis of what's the right one to be trading. Yeah, Joseph, you need to change to the YMM6 now, right? Just look at volume and compare it to the pound F, and you'll see the reasoning for it, right? The H6 is still trading fine. We've still got the same movement just about as the pound F is, but our numbers are slightly off on that. There's a little bit of a difference in there. Yeah, I tell you, why not trade from the dome? I actually like trading from the chart better because it gives me the ability, and again, not a good place to take the trade. I liked it better when we were down here, but it gives me the ability to see my setup right on the screen. So if I were going to put a limit order in right now, right, I can go ahead and say, give me, I'm going to buy a limit one contract at 17,160. Right? Well, yeah, I put it in wrong. So I got filled right there, but I can see it right on the chart is the whole reason for it. I can see this right on my chart. I am not trying to trade it off a dome, and I can watch the chart, because if I work with just the dome, I've got to look at two different things. I'll tell you, that's the only reason. Now again, Debbie, who's in here with us and who's in the E-mini Trader Talk with us, it uses the dome. She trades off of it. That was the way that she learned. I did as well. But to me, it's just easier to trade off of that chart than it is to trade off of the dome, because I don't have to look at two different things. The chart will show me the pattern where the dome just shows me the momentum. All right, so we closed that out and locked in a whopping $5. I just didn't want to leave a trade open there. Sorry to hear that, Johnny. That is awesome. I bet. So I'll tell you, you're quite welcome. Debbie said, I need the ladder. And there's nothing wrong with it. There's nothing wrong with having that. You have multiple layers in there, right? I just have the front layer of where the immediate bid and ask are, right? And that's okay. There's nothing wrong with trading. It's all a matter of a comfort zone, right? Where you are comfortable with. Drea, what blue box? Oh, you mean right here? On the top, me too, which is why it's always hidden. I don't like that open. I only open that when I'm analyzing things on a daily chart, but I don't normally keep that box open. It's not for me. I want my charts as clear as possible. I don't want to see even the trading screen up. If I'm not in a trade, I really don't even want to see it. I'm not interested one bit. Not at all. All right? Let's see. Is it better to master equities before you go to futures? Drea's asking. I think it's better to pick one and stick with it, Drea. It's all a matter of what you're most comfortable with. Joseph, who's asked a couple of questions in here, Joseph, if you're still here, your wife has never really traded options, but she started right away with practice trading on the futures. Is that correct? And she found it easier? Joseph put in a 1 for yes. So it's all a matter of your comfort zone. Drea, are you more comfortable with one versus the other? Then that's the way you go and trade them. So it's not a bad thing to do. It's just a matter of what you like better. There's a lot of advantages to this. We do trade them live on Monday nights in the E-mini Trader Talk, right? Speaking of futures, guys, what I'm going to be teaching, I made a decision this weekend. Now I need to put my presentation together. What I'm going to be teaching at this upcoming Trader Super Summit down in Orlando, which is coming up in May, guys. So if you haven't registered, get registered, because the price goes up every month the closer we get to it. What I'm going to be teaching are two brand new strategies that I've never taught before. One is I'm going to teach you how to trade oil, and the second one I'm going to teach you how to trade gold. And I don't know if you think there's any value in those or not, but just as an FYI, here's ABX, is Barrick Gold. The stock ran from $8 up to $14, so near a double. All right, and that's just one stock. Now we're going to talk about trading the futures on gold, which have skyrocketed, just like the gold stocks have, and no different on oil. Oil has been a phenomenal trading vehicle. Let's grab the daily chart on oil. Look at the move. Oil has gone from $26 up to $38, so about a $12 move in there. Broke all that. Downtrend, just so many clear entries in there. Go gold. You're right, Dr. Tom. Good, Johnny. Look at the E-mini DVDs and get ready to start trading the futures. What you're saying, that's great. Dennis said, great, I'll see you there. Yes, both of value. Yeah, they are, Dennis. We're going to have a good time. We've got a lot of great stuff planned for it as well. So I am not heading up the planning of it this year, but I am still very heavily involved. So we've got some really good things that are on the docket for it. Cool, guys. I'm getting the hook. We're a little bit past that 1 o'clock time frame, so I didn't get to a symbol. I apologize for that. I did get to all the earlier ones, but I thought it was important with some of the questions that were coming up of I'm running out of time. How do I do some of this stuff? Get into the E-mini trader talk with me on Monday nights, guys. Listen, take a test. Go with a 1 week test. I think it's $149. You can come in and hang out with us and see if you think there's any value to it at all. And if you like what I'm doing on the equities, then get involved with what we do here, guys, on the market insights. Here's why. That's what we're up this year, $386,490. From January 28th of 2014, we're up $2,867,000. All right? And that's only trading options, trades. We don't do any futures in this. That's just the equities positions. Right? And that 4350 are the trades that I have open right now, which are ones that we're actually in, so I'm not going to show them to you right here, but I did tell you some of them and where we got in, price, and so forth. But this is reserved for those of you that are in the market insights. So, by the way, those that are in the market insights, I did get a trader's chat on the books. I want to say it's the 6th of April was the first date that I can get it in. Let's see, April 6th, 8 to 10 p.m. If you're in the, yeah, Patty says, yeah, if you're in the think tank, you're right, Scott, but if you're in the market insights, then you get that for free. If you're not, it's $249. It's cheaper to get in the market insights and get 2 or 3 of them than it is to just subscribe to those. But you are right, Scott. I keep calling it Trader Talk. It is Think Tank on tonight. So I'm really excited about it. We're going to be going through some good stuff this evening. So, ladies and gentlemen, we are done. Appreciate you being here and asking all the questions you did. That was awesome. Have a wonderful day. God bless. And make sure you guys get set up for TSS and pick a track. E-minis or options. I've got a way for you to learn how to profit from them. So come on, hang out with me. All right, take care, folks. See you all tonight at the Trader Talk. Bye now.